Hey everyone, welcome back to the channel. Today we're diving into one of the most innovative ETFs launched in 2025 in my opinion. The Roundhill Weekly Pay Universe ETF, ticker symbol WPAY. If you've been searching for a way to get consistent weekly dividend income with some leverage for growth, WPAY might be your new go-to ETF. Let's break down what makes this ETF so unique and why it's getting a lot of attention. First, let me introduce myself. My name is Wes, and for the last almost 3 years, I've been researching ways to make passive income through both the stock market and cryptocurrency. And I want to bring my results, good or bad, to you through this channel. If that sounds good to you, make sure you subscribe to the channel and like this video. I'd greatly appreciate it. Okay, as promised, let's get right into it. First up, what is WPAY? WPAY stands for the Weekly Pay Universe ETF created by Roundhill Investments. Unlike traditional ETFs, WPAY pays dividends weekly, yes, every single week. It does this by investing in a basket of leveraged single stock weekly pay ETFs. These underlying ETFs amplify the weekly performance of popular stocks like Apple, NVIDIA, Tesla, Amazon, Google, and more, targeting roughly 120% of their weekly return. Well, what does that exactly mean? It means you're not just getting exposure to these big names, but also potentially higher weekly income distributed every single Wednesday. So how does this actually work? Well, here are the holdings and we'll take a look. WPAY is essentially a fund of funds. It holds equal weights of around 15 weekly pay ETFs, each focused on a different single tech or growth stock. Every week it pays out dividends generated from the underlying ETF's performance. These payouts started at about 54 cents per share and could vary going forward based on performance. It's rebalanced monthly to keep the portfolio equally spread among all these ETFs, so you don't get overexposed to one stock. The fund's expense ratio is around 0.99%, which is reasonable. There is a rumor that I cannot confirm, but I heard that they're going to have a 0% expense ratio for the first year. If anybody can confirm that, please let me know in the comments of this video. I'd appreciate it. Okay, now let's talk about what really could set WPAY apart from the others. Many income ETFs earn dividends through selling covered calls, which caps your upside in exchange for premiums. But WPAY's underlying ETFs don't sell options. Instead, they use leveraged exposure to the weekly stock price movements to deliver both growth and income. So you're not sacrificing potential big gains for income. However, that leverage means risks are higher. Losses can also be amplified in down markets. This isn't a set it and forget it fund. It's designed for investors who want active, higher yield weekly pay along with growth potential. If you're an income-focused investor looking for a consistent weekly dividends instead of monthly and quarterly payouts, this ETF is worth considering. It's also ideal if you want to gain leveraged exposure to some of the biggest tech stocks and growth names without directly managing multiple individual leveraged ETFs. As with any leveraged or income fund, there are risks. Leverage can magnify losses. Dividend payments could fluctuate based on market volatility and fund performance, and some distributions might be return of capital rather than pure income. It's important to monitor this fund regularly and understand the risks before investing. WPAY is an innovative way to get weekly dividend income paired with leveraged exposure to high growth stocks. It's a compelling option for investors seeking frequent income with growth potential, but it's not without risks like any other investment. If weekly income and tech exposure excite you, this is an ETF to watch. My general opinion on this one is I have to watch the actual chart itself for a while. you watch my channel before, you know I rely on the charts heavily before I invest in anything, and this one looks pretty good so far. I'm going to draw a trend line here, and we can go back to this in a while. Go under the candle here in the full. This will bring us out to the end of October. Let's lock that in. But what I think will happen is it'll probably go sideways unless the market continues up higher in the next couple of weeks. It looks like it possibly could with the interest rate decision, and I'm thinking of possibly getting into this one because I like how Roundhill works their ETFs. Another positive about this is I like how they're going to reevaluate every week and get into certain funds in kind of a balanced manner, which is going to be good for the future, I believe. This is, make sure that you know, this has only been out since the beginning of September, which is, 15 days ago. So we have to be careful with these and kind of dollar cost average in possibly. I like the 54, is it 54%? 52.28% distribution rate so far, which is amazing. I'm going to do more digging over the weekend and see what I can find, and I might put a little bit into it this coming week ahead. As always, thank you for watching. God bless you, and have a great day.